thank you. It's a pleasure to be here with you today. And I have the pleasure to have one of the key impact investors in Europe. So they're really inspirational, all their track record, they've been doing for the last years. So I'm going to start introducing them. First of all, we have Stephanie, who's head of impact at Atypical. Stephanie comes from Bridges. Let me introduce you as you deserve. She was head of impact at Bridges. As I was saying, impact is one of the UK's key impact investors in Europe. He's been a pioneer in the sector from the beginning. She was also one of the ones that launched the Impact Management Project, which is a really interesting initiative to make impact management and impact measurement transversal globally. And now recently she's joined Atypical to launch, you can say it better, a sustainable alternatives platform across Europe.
Exactly,
so,
thank you.
Welcome, Stephanie. It's a pleasure to have you here tonight. Nicola, please join the stage too. Nicola is investment junior partner at Ultra Ventures. Welcome, Nicola.
Welcome.
Ultra is also a pioneer in impact investing in Europe. They were the pioneer fund in Italy, and they are still leading the way in the Italian ecosystem. He began his career in investment fund in real estate and was also involved in Rocket Internet, in the Rocket Internet startup. He's joined Ultra for now some years. I won't say how many, but he's been leading the way. He's invested already in 10 impact companies and is part of the board of 5 companies. So I'm sure he'll be able to give us a great overview of the sector and where it's heading.
Glad to be here.
Welcome. Next we have Marion. Marion is Impact Investment Manager at Quadia. Welcome, Marion. Quadia is a fund based in Europe and has a very interesting fund specialized in sustainable agriculture and food, as well as circular economy throughout Europe and the US. She has also been working before with many social enterprises in the philanthropic space and in M&A in Spain, actually, so she knows our country well. Welcome, Marianne. It's great to have you here today. And last but not least, we have Laura. Laura is investment manager at Bridges Sustainable Growth Fund. Bridges, like I was saying, is one of the leading funds in the UK. Laura works on sourcing deals and supporting the portfolio companies. She's also part of the board of many companies, Viva Gym, Alina, and Kuko, among others. And when she first joined Bridges 5 years ago, she was also in the fundraising and business development. So she has a lot of experience in the sector. Welcome, Laura. It's a pleasure to have you all here today. So let me start with the first question. I guess throughout the whole summit, we've been hearing a lot about sustainability, sustainable investments, and companies that are really trying to make a difference and try to fight climate change and make the world a better place, right? You've all been working in the industry for some years. You're all now experts, I would say. So I think it would be great if we start by thinking on what is it that makes impact investing special? And how do you think impact investors have a special situation to best support these social entrepreneurs that are really trying to work to make a difference? Steph, do you want to start?
Yeah, I'm very happy to. Thanks for being here. It's nice to be here, see also so many of you. I think impact investing is special to me because I think it gives me and a lot of other people actually a lot of hope. We address with our capital some of the most urgent challenges, stuff that we actually should all care about, creating a healthy society, preserving a healthy planet. That is what impact investing is about. That's why it's special. And I guess also we kind of, with our investments, we also shine the light on people that are really driving that forward, whether it's employees, whether it's actually really innovative entrepreneurs. I think that makes it extremely special because those guys are forward-thinking, and like many of you guys here actually today, they're brave, they want to change the world, and they want to be sustainable and not only focus on short-term profit. So I think that makes it extremely special. Then what can we do for our entrepreneurs? Obviously, give capital, which is quite helpful, I guess. But more importantly, I think kind of help them tell these stories, right? How do you tell that you're not only about profit, but also about purpose? The way to measure it, as well as kind of really using ESG and impact as a value creation lever in order to be sustainable long term. I think that's what makes it special, and that's our role as impact investors.
Thank you, Stephanie.
I'll go on.
Do you want to?
Well, special in general, I actually don't know. I can tell you why it's special to me again. I think it's fun, because the fields that we are investing in and we are studying, analyzing are, to me, the best ones. So studying healthcare, the way to disrupt healthcare, or elderly care, or sustainability in terms of energy, waste management, it's much funnier than dealing with marketplaces and food delivery. That's my opinion, so don't take it bad. And in terms of helping the entrepreneurs, I think it's still a young market, actually growing, but it's still a young market. So the right approach, again, to me, is to be co-entrepreneurial with our entrepreneur and help them develop those companies, not just helping them with the finance, which also bring additionality, because we bring money where money shouldn't, the money usually the money don't go there. But also we need to bring structure, professionalism, and work with them and make them feel that we are backing them and we are taking the same risk as they are taking, and being actually next to them in the decision. And that's, I think, the only way the sector can grow and thrive.
Yeah, maybe to add to Stephanie's point on people, I think what makes impact investing special is also intention, the intention of people, intention of investors. As you said, we are not just looking for financial returns, or short-term financial returns. We have the intention to support and contribute to the transformation of the economy, the system. So that's really the intention. I think impact investors are also sharing with impact entrepreneurs and the view and the vision on what's value. Yeah. What's value for us? Like we, for example, at Quadia, we really are, and I think we share all of us. We really try to support companies to create more economic, environmental, and social value. And that's a business model we are supporting and investing in. I think that's really the difference with investments in general.
Mm-hmm. Thank you, Marion. I'll come to you, Laura, now. So I think we're at a fascinating point in the impact investing industry. We're all obviously passionate about what we do. I think we all have the feeling that it's you're on those early stages of an industry where it's being built, where you can actually make a difference, where you can actually help shape it. But it's also true that the impact investing industry has also grown really exponentially in the last years. At least I started myself 12 years ago, and I've seen how the industry evolved, and I've also changed from the US to Latin America to Europe, so it's very different also how it is in different markets. But I do think that we all share that we're at a point where it's starting to be more mature and reaching a different point, right? So actually, because you know, the impact industry, it was estimated last year that it's around 700 billion, and it grew almost by 50% from the precedent year, right? So so it is growing quite rapidly. So Laura, I wanted to ask you, where do you think the industry is now in terms of maturity? What are the challenges? Where do you think it's going? Where do you think yes, give us a bit of an idea of the industry.
Yeah, absolutely. Please. I think it's quite a difficult question because it really depends which group of people you're speaking with. So obviously in this group, not to say we're an echo chamber, but obviously we're all here for a reason and we're all supportive of impact investing and sustainability as a concept. So kind of half the time I feel like we already have reached that tipping point and this is mainstream and that's great. And then as soon as I sort of speak to maybe former colleagues that work in the more traditional private equity or investment banking world, it still does, unfortunately, not to be too cynical, have a bit of a rep of being warm and fuzzy, but maybe not rigorous and able to generate financial returns in the same way that traditional investing or private equity can. So I think that is frustrating because there is a huge amount of good intention and growing recognition of the role that impact investing plays. But probably to kind of really move that dial, for me, it kind of comes down to standardization and shared definitions so that people can, which is a lot of the work actually Steph did, the point of the impact management project, so that in the same way that we have generally understood accounting principles, for example, impact is understood in the same way. And it comes back to the measurement, the outcomes, again, in the same way we would look at financial metrics, but also just really getting, again, to Steph's point, getting those stories out there that there isn't necessarily a trade-off between, creating positive social and environmental outcomes and generating a strong financial return. That really has to be understood for this to become fully mainstream, I think.
Mm-hmm. Do you want to join Lara on your views on the sector?
Yes, I mean, that's a good view, and I agree on the storytelling, because there is still, in my opinion, a lot of confusion about impact investing. I agree it's growing, but there is still a lot of confusion about ESG, which is mainly now seen as a compliance by investors, SDGs, impact, and this confusion is among people, among investors, but also among institutional investors, which makes a bit more difficult to fundraise for an impact fund. So that's what we are seeing as this might be market specific in Italy, but what we are seeing is that institutional investors, like the traditional pension funds, they still don't know what product we are, no? So they know what's a private equity fund, they know what's a VC fund, but our products are a bit still not so known, and that's on the negative side. On the positive side, it is growing. I agree. We see more and more VC and private equity funds raising as impact funds. I think 2 weeks ago there is a huge private equity funds in the Nordics created, and they fundraised 900 million as an impact private equity fund. It was the ex-founder of Equity, which is a huge private equity fund, who launched this fund, which is basically crafted on impact. And this is giving a lot of resonance to the sector, and I hope this is gonna give also to us and to our funds, to our reality, a boost in the future, because I mean we need money to make what we want to make, no? So we need not a lot of money, but yeah, the more the better. So yeah.
Of course. So following on your thoughts, as the sector is growing, and as you're saying, sometimes we feel it's mainstream, sometimes I share with you that you feel it's still too slow. It should be quicker, right? But there has been a lot of talk among the impact investing industry and beyond on a concept that is more around impact washing and greenwashing, right? What is it? We've also seen the EU, the European Union, introducing more regulation to try to fight greenwashing, right, with all the taxonomy and the financial disclosure regulation. So I wanted to ask you on this very complex topic, what do you think of impact and greenwashing? Do you think it's a reality? Do you see it in the markets that you operate? Do you think is it a threat or an opportunity for impact investing?
Shall I start with that? Okay,
Please.
big question, big problems. I actually don't think it's such a big deal. In a way, greenwashing is, I think, part of human nature, right? We like to kind of overstate the work we're doing, the things we're excited about, and I think that's exactly what is happening right now. But to me, it's extremely important, because actually 20 years ago, when Bridges started, everyone was like, what are you doing? What is impact? And now fast forward, everyone talks about it, puts it on their annual reports in one way or the other, but I think that's extremely encouraging, because it means it's becoming popular, there are more players in the market, and ultimately I'm not worried, because I think it'll become extremely competitive over time, right? I think it's just one stage where we're seeing there's a tipping point, as the guys were saying. We see big investment managers, traditional money coming into the sector, and that's exactly what is needed to scale. In the interim, there will be a bit more fluidity, and people will do whatever they think impact is, and they will talk about it in whatever the way they think it should be talked about. But I think that's fine, and I think what regards, TCFD in the UK, SFDR in the European Union, I think we all welcome that kind of put regulation in, have a bit of a level playing field. I think that's helpful, but actually what's even more helpful are kind of industry-led initiatives to really hold people accountable, right? Whether it's the Impact Management Project, whether it's the Harvard Business School with their weighted accounts initiative. I think these are kind of from the industry, for the industry, thinking about what are the standard norms you actually have to prove in order to call it impact, ESG, sustainability, whatever it is, but kind of really describing the effects that you're having. And I think ultimately that will kind of make the difference, and that will make people truly differentiate going forward. I think, accountability will be there in the interim. We have a bit of greenwashing, but it means we actually finally talk about it, which is great.
Thank you, Steph. Marion, do you want to join Steph?
Yeah, I couldn't agree more with Steph and Nicola. I think it's not a threat, that's for sure. It's an opportunity to bring more assets, money to impact investing. You reminded us the data that asset under management in impact investing is less than 1% of total asset under management in the world. So we still have work to do to attract more funds and more investors to impact investing. So yes, that's great. We are talking about it, and then it goes back to what I was saying, the intention of people doing impact investing and also of companies. And I really think authenticity will be the key for impact companies to differentiate themselves on their own market. But that's also a way and the key for me for impact investors to really differentiate themselves and ourselves. So I don't think it's a threat. Let's talk about it and let's bring more money to the really impactful companies that are transforming the value chains and the sectors.
Can I add a thing on that?
Absolutely.
I think it's a warning. What we used to say in our team internally is like, there is a risk that when everything it's impact investing, nothing is impact investing. Mm-hmm. And that's a risk for us. We basically, Ultra was created 15 years ago, one of the first with Bridges funds to do impact investing. For us, it might be also a threat. So there is a side that might be a threat because we lose capital. So if everything is impact investing and everybody's telling I'm doing impact investing, the risk, which I don't know if it's going to happen, I hope not, is that we lose capital towards those bigger institutions which are saying, oh, no, we know how to do impact investing, so let's do it. And they are better at fundraising because they have bigger structures. So that's just a warning that I'm putting there.
Yeah, but I also think entrepreneurs raising funds, if they want impact funds, they are talking to the investment managers and they see the difference.
True, that's true.
Mm-hmm. Yeah, no, I think it's great that you gave the both opinions, right? I think you're both right? It's both an opportunity and a threat. And a threat, I would say, not only for the impact managers, but also for the big challenges that we're facing, right? That actually need solutions and need investments that go to the very deep problems and not to the more superficial problems, right? So on that line, I guess you've all been in the impact investing for some years. Probably you'll be the leaders of tomorrow in those impact funds. What do you think will be key to really unlock those big capitals to make deep and profound impact, right? To really face the climate crisis, the big division on inequalities, right? The big challenges that we're facing. What do you think needs to happen in order for real change to be made? Laura, do you want to start?
I think, so the first part of my answer would also be very much related to our last question, which for me, it really is a threat, greenwashing, because this is going to sound maybe overly pessimistic, but it shouldn't really be seen as any different to kind of having financial fraud in the worst sense, because investors don't understand where their money is going and really what outcomes they're generating. That's a huge problem for the growth of the whole industry, and it can create clearly perverse outcomes. So I go back to the point I made before about, standardized understanding of how things are measured and really where your capital's going. I think there's also massive reputational issues around that because there's still mixed opinions in the broader market around impact investing. Sadly, just a handful of kind of scandals can have a really negative impact still. So I think that's probably one part. And then the other, perhaps obvious, is having more of a dialogue between all the different stakeholders that contribute to tackling major global challenges like climate change and income inequality. And I think there are a lot of organizations and a lot of forums and things like this that try to marry up government, charities, private sector, capital, and how can they work together. But it feels to me like that's still it's just very disparate. They're not all joined up. I realize that's a huge job, but for me that would probably be the single biggest unblocker if there was a kind of better forum for those parties working together on kind of a thematic or challenge-based approach.
Yeah, if I can.
Of course, please.
I fully agree with Laura because I think the only way to really make impact is to join efforts, innovators, investors, large corporations and governments. We can finance small, impactful startups or SMEs. We can keep investing our relatively small funds in comparison with the rest of the industry, and do things well. But if large corporations, if large funds keep financing damaging activities in terms of environment and social issues, like all the small efforts will be destroyed. So we need regulations, we need to change also maybe accounting methodology to really make the vision of what's value, what's positive value and value added impactful. We need to change this international vision, and it seems boring to change accounting rules, but I really think that's where we can really make a true impact. So joint efforts from the public and the private sector, for me, that's the only actually leverage to really make impact.
See, we cannot leave out of the equation the state and the government, because we can do a little impact, I think, on all those problems that you mentioned. Without governments and a big structural change within government, within state, there's little we can do. I mean, not to be cynical, but it's, in my opinion, the only way. And about standardization that Lara was mentioning, I think it's important as well, because investors now, in terms of capital, because the more capital you have, the more impact you can make. Again, you can invest in small companies, but also on big companies making impact, which is, you need more capital. And to attract those investors, you need a standardization, because the investors now are looking for returns. Institutional investors, which is normal. I'm also looking for returns. But if you give them standardization in the measure of impact, they can balance it. They can not that we have lower returns than usual funds, because this is I think it's a legend. Because they always say, you don't have the similar returns at the traditional investment, which is not true. First, what's the normal returns? Nobody knows. Double-digit returns. I can have double-digit returns. If there are institutional investors here or connected, contact us, because we can have double-digit returns. So standardization is important because you need to attract capital, making higher returns and standardize the impact measurement.
It's very interesting what you're saying. Maybe going to the triple instead of only risk return, introducing risk return impact, right?
Exactly.
And then measuring what is the ideal risk return impact combination can be very key. Please, Steph.
Yeah, we'll get there. I mean, people will be held accountable for that. That's how it will, the whole industry will differentiate itself once we are out of this kind of impact washing transition economy model. I think apart from the state, actually all of us can actually do something about it. Across the investment value chain, we need to keep asking the difficult questions, the uncomfortable ones. Whether you're a consumer, ask where your product is coming from. Whether you're an employee, ask where your pension is going and where it's invested. as an entrepreneur, think about, can you be short-term or can you actually make it long-term sustainable returns? And likewise, as investors, I mean, we just need to all get better at asking these difficult questions across the investment value chain of, what are you giving me for the pound of money or the dollar or the euro I'm investing in? Because we have all proven now in the last 20, 25 years that impact and financial returns can happen, and that there's a spectrum of capital for all the different financial products. We have a surge of interesting products coming our way. There's a surge of capital coming our way. So let's ask these questions, because we all can do something about it.
Mm-hmm. I really like. I could ask you 100 questions, but I don't want to miss the opportunity to maybe throw it back to the audience in case anyone wants to ask any question. Please.
What are the main standards or frameworks that you were using to measure the impact?
Steph,
I can speak about this.
You have the expert here.
You know, there are obviously multiple frameworks and standards to use depending whether you are a business, an investment manager, an investor. I think from personal cause, we've started in 2016 a project called the Impact Management Project, bringing together 10,000 plus practitioners in the industry across the investment value chain to actually design standard and norms, so that we don't just sit around the table and one says, I'm an ESG investor, the next one is like, well, sorry, I'm doing only sustainability, and the next one, I'm a responsibility investor. And kind of working on the standard and norms of really describing what is the effect that you're having, whether it's negative or positive, on people and planet. And as an investor, what is your contribution? To me, I think that impact management project has kind of united quite a lot of people, has brought quite a lot of standards and ways to think about structuring your answers around impact. And ultimately is now being rolled out, working, you know, not only with impact institutions and kind of big organizations, whether it's the GRI, the United Nations, but also everyone in the financial industry. So the IFRS, they're looking at it, the CFA. So it's now working kind of cross-sector, cross-industry as it should be, because it's not a separate asset class. So I think that's one to highlight. Then there's Harvard, obviously, with their impact-weighted accounts initiative. There are very many. I mean, I think, you know, there is a framework for, depending on what you're trying to do, what you're trying to prove. I think it's just understanding the use case for each of them.
Mm-hmm. Someone wants to... We only have 3 minutes, so maybe I'll take the advantage to do a small closing. I'm really thankful for all your views. I think it's been great to hear your experience and also see how there's many subjects that are still to be defined, right? I think I do agree with you that we're sort of... we can make the impact revolution, right? That's at least the dream that I've always had. And I really like what you said, Steph, because it's something that I also believe, right? That we all need to just, it's a change of mindset, right? We just need to be conscious that we all can make a difference in every single day, in every single decision that we make, right? Obviously in whatever we are consuming, which is a trend that we're starting to see, but don't forget also where your money is going, right? Because people don't feel it, but they have money in the bank, they have pension funds, and that money is going places. And if you want to be coherent, I think there's more and more options to really try to align where your money is going, where you're consuming, investing, and your savings, and try to really make a difference with that money, right? Because I think we all agree that we're facing really important challenges. Deep change needs to be made in order to really be able to tackle these global challenges, and we need to work together in order to really make a difference, right? So it's really been a pleasure to be here with you all today, and obviously happy to answer any question. We will all be around.
Thank you very much.
Thank you very much.
Thanks to you, Lara, Stephanie, Nicola, Marion. Laura, thank you very much for these insightful views. And exactly as you just say, let's be conscious to whom we are giving our business and to whom we are handling our money to make the biggest impact possible. I mean, we're 8 billion people in the world. That if we all take the good decisions, we will make an impact. Thank you very much.